Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar struggled to recapture the 67.35 level on Wednesday as renewed unease gripped traders as problems at the Zurich-based Credit Suisse group revealed fears of a banking crisis, which triggered a run to safe currencies such as US dollar and spot gold and Japanese yen. The Credit Suisse Group, a global investment bank and financial services founded in Switzerland in 1856, plunged more than 24%, stoking fears of another bank collapse following the closure of Silicon Valley Bank in the USA. However, news rocked global markets as Credit Suisse's largest investor, the Saudi National Bank, said it could not provide the Swiss bank with more financial assistance. However, the Swiss National Bank said that it would provide liquidity to troubled lender Credit Suisse if necessary, after a late statement on Wednesday in a joint with Swiss financial market supervisory authorities. So looking at the Australian dollar, as I mentioned, the market did drop away from that top side 67 figure 35 area and posted an engulfing candle. Now looking at that candle, a market move beneath 65.90 would reinstate the bearish case and look back towards 65 cents as the immediate target. Given from the technicals, and unless we see a break of 65.90, we may see a small retracement as the market heads back towards the region of 60, 80, 85. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, surged 1.6 from 103 to 104.68 and settled around 104.30 from the rally. This saw the euro ignite from the top side to a bear run and now looks back towards the bottom side of its range. But respectful, it did hold in a 105 to 107.50 broader range. In light of the technicals, they're a little bit weaker, and as I mentioned earlier in this week, that if we do see a rebound in the dollar index, then this would reaffirm the move back to 106, and it looks very much like that. So therefore, I feel there is more pressure to come to the downside. Although all eyes will be looking to the ECB when they meet with an expected 50 base point rate hike. This would see interest rates rise to 3.5%. The dollar yen, well, due to the safe haven appeal, that is, for the US dollar, gold, and also Japanese yen, we're seeing a bit more weakness coming out of dollar yen. And now looking back towards the bottom side of the range after rejecting that top side of 134.70-80 area. And in light of the market weakness, we've got an engulfing candle. A break of 132 would give further guidance towards the downside and maybe back towards 129.80 if yen continues to strengthen. But then again, we do have a dollar strengthening as well, so it will be a bit of a challenge at 132. And let's see if we can get another bounce. I feel there may be, due to the RSI is in a prime position, so showing some bullish divergence. So therefore a rebound would look back towards 134 as initial objective. Sterling, well, the market came into a lot of difficulty above 121 and now holds above the support level seen around 120.25. A break beneath there would give further scope down towards 119.65, but I feel that there is still a little bit more upside to this current pattern, and therefore may see a rise first of all if we don't take out 120.25 to 120.95 to 121.65 and reassess. As I mentioned, the safe haven appeal, but get right across the board when it comes to gold, US dollar and Japanese yen, is that the gold was very whipsawed. And after rebounding off 1,885, it surged back to 1,900 and 35 area, but then quickly dropped away. Technicals are still somewhat a little bit to the overbought side. So I feel that we could see a slight play into the downside, into the European session, but towards that level, that is around 1,897, that gives little scope to around 1,884, which was where the rejection was. In my broader view, I feel the market is toppy, but nevertheless, if the if the banking sector is as fragile as it seems to be, then we may see a little bit more upside, but likely to be limited. As I mentioned yesterday, above 1,930, there was a lot of noise and also good supply, and no doubt this is where the market will see opportunity to shorten gold, as we could see that pullback, as I mentioned, to around 1,868 to 74 as a broader objective. The levels of 72 and now down to 68 taken out does give a little bit more to the side of reassessing or reevaluating oil, due to the fact is that we're extremely oversold. Still, when I say it's time to reevaluate, the market is, I believe, warranted for a correction to about 72 to about 74. But that being said, on the flip side, we could see a break and a close under 68 and move into 67 and maybe even lower down towards $62 a barrel. But that call on either side is very weak, and therefore I'd rather, as I mentioned, sit out for the moment, be neutral, and reevaluate the current look in the next coming day or two. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.